Voyage is about taking you to a journey. In 10 years, the journey has been extraordinary. And I'm going to quote the Prime Minister here. Last evening at a forum, the Prime Minister said the following, and this is data. The total AUM in 2014 for Indian mutual fund industry was 10 lakh crore. Now it's become 52 lakh crore. And it's so inspiring to see that what appeared like a concept, what was a thought, has now become a consensus view. So I'm going to ask two simple questions to everybody. How many of you have attended all 10 seasons of Voyage? Raise your hand. Okay, very few I can see. How many of you have attended the last 5 seasons? Okay. How many of you are attending the first time? There you go. Now that is the new India. That is the new India we are talking about. That how. Okay, how many of you have a EMI? सबकी EMI होती है? How many of you have a SIP? Raise your hand. There you go. Isn't this the new India? The number of people in this room who have SIPs is far higher than the number of people who have EMIs. So now with fund managers, what can I talk? Flows आते रहेंगे, अब क्या बात करें? महेश, बात ही नहीं करने कुछ. So I had taken this impossible task, which I think I've achieved in the first 1 minute itself. A task that I will make Mahesh Patil laugh in today's Voyage. And he's smiling in the first 30 seconds. So Mahesh, it's a good beginning, right? It's a great beginning. Okay, now, 30 years wealth management. 30 years of CAGR return, which is superlative. Let's understand where we stand now. They say good news and good prices. It rarely comes together. Right now the news is great.
Right.
सब अच्छा लग रहा है. कुछ खराब नहीं है. But when the news is great, prices are bad. What is the way forward for the audience here? What should be the message from Birla AMC and what should be the takeaway for them?
Yeah, good morning and welcome to this Voyage event. So I think we have been through this occasion, okay, we've been trying to put forward our views. Okay, every time we come, okay, and talk over here, we always worried, market has reached a peak, what now, right? That's a common question which is there, right? But you're right, I think last 1 year has been unprecedented, right? The kind of returns, what we have seen. And it's been climbing the wall of worry. I mean, we had all the concerns, what you can say last year, right? We had the Russia-Ukraine crisis, which was earlier, high interest rate, high inflation. And despite that, we have seen fantastic returns. Obviously, markets have gone slightly ahead of fundamentals, okay, is what we can guess from that. But yeah, you're right, sentiments are at its peak. By the same time, a lot of skepticism is also been there, right? If you look at a lot of foreign investors, they have been selling, right, last year. And it's been the domestic investors, okay, which we have seen strong inflows over there. But I think when you look at the market or even look at the stocks, the way you look at it, a stock becomes expensive, right, because of price appreciation. But I think it's more about backward but forward looking. What is the story likely to unfold going forward? And that's where is the India story. I mean, the theme of our event is Dominant Bharat. And we had the earlier speaker, Dhawal, talking about, if you really believe that Bharat is going to be the third largest economy in the last 7 years, right? And the GDP is going to grow at, say, 7% plus. I think then you will see a lot of opportunities emerging. I think corporate India growth we have seen, which has been very strong in the last 2 years, I think will continue to grow at a double-digit rate, right? And if that is the case, then markets, while they might consolidate a bit in the near term because of the last huge outperformance, but I think you will still make the long-term returns what the markets have given, right? In the last 30 years or 20 years, if you look at markets have given around 13% compounded, I think which is a great return which one can expect. And I think there will be some challenges. We are entering into a period where US economy, right, globally you could see some slowdown. And to that extent, there could be some hiccups. But clearly for investors or who are taking a longer term view, I think this is an exciting time to be in here, right? I mean, I see that for the first time, a lot of fundamentals are falling in place, right? We have, for the GDP, investments, okay, which has kind of not really fired in the last 10 years. We are seeing that leg now starting to do well, okay, which will continue to sustain our growth. Most importantly, I think India's macroeconomic stability has really been significant improvement over there, right? For a developing country, I think that's most important. Whether you look at our currency, right? The volatility in our currency in the last, whatever, 2-3 years has been the lowest, one of the top lowest decile compared to either a developed market or the the emerging market currencies. We have seen that interest rates, right, have been fairly stable. So I think that macroeconomic stability would ensure that India's risk premium, which is there, okay, needs to come down. So that will mean that India will continue to remain expensive. I think you're not going to get cheap. I think people always complain that India is expensive compared to other emerging markets. I think that premium will continue to be there. And I think that's I think what I think investors, if, as I said, if the GDP grows from here, corporate earnings grow, I think you will see returns, reasonable returns from here is what we should expect.
So, if last 2 years, last 3 years have been great. If one looks at the next 5 years, next 10 years, do you think equity returns will be in line with the historical averages, which is anywhere between 13 to 15%? If the starting point is, let's say, today, do you think future returns would be in line with long-term averages for next 5 to 10 years? You know, you may get 1 good year, 2 bad years, 3 good years, 4 bad years, but in general, 5 to 10 years, will the averages of long-term be maintained?
Yeah, I would say, see, if you just go back and see, right, while last 2-3 years has been fantastic, but we went through a pain period, right, even in terms of economy, right, from 2013 to 2018-19, right, where the earnings growth trajectory was much lower than the long-term trend, right? I mean, our long-term trend of earnings growth has been slightly higher than the nominal GDP growth, which is, as you know, and we were growing at around, say, 5% or so. I think it is the last post-COVID where we've seen that acceleration, and there's been a big transformation which has happened. We have seen the overall productivity, the ROEs of the companies has gone up. I think the whole digital transformation also what we have seen, I think India has really handled that very well. And that also places in a better position in terms of globally the change what we are seeing. And also the world, the way the world is reimagining, right? India has now arrived at the center stage. India is likely to be a supplier to the world in a larger sense. So that's an opportunity which was not there earlier. And that puts you in a different growth trajectory going forward. So I would say that if you look at the broader market, right? I mean, there are pockets of over exuberance in the market which are there. But if you look at Nifty for that matter, right? So Nifty, while it has done well in the last 2 years, its earnings growth has also been in line with the returns what Nifty has given, right? So the market is kind of fairly valued or slightly above the long-term average. So in that context, I think returns, I think should track earnings growth, right, is what one would expect. And earnings growth will broadly track your nominal GDP growth, is what I feel. So you're right, I think you can expect the long-term trajectory of earnings returns and market returns is what investors can expect over the next, say, 5 years. I mean, there'll be ups and downs. I mean, after such a large outperformance, there'll be a period. I mean, Nifty, we were discussing the last show, right? In the last 8 years, the market has not given negative returns. I mean, this has been the longest streak what we have seen. It can still continue, but I think we should look beyond that and take a view for the next 5 years. I think that looks still good even from here.
Harish, I'll start with a very simple question, a question which in a sense pops up on our social media, a question which everybody asks me when we are walking into this, Voyage symposium. अरे market बहुत चल गया है, गिरने वाला है, संभल के रहो. There is a general view that, okay, the run-up has been extraordinary, it's too good to be true, and there is bubble and trouble in the market. Can I say to this audience confidently that the Birla House view is that there is no bubble, there is no trouble?
Bubble trouble. Thank you, Nikunj, and really excited to be part of this voyage. For me, of course, this is my first one, having joined Team Birla Mutual Fund.
Are they a good team? Have they welcomed you well?
Yeah, they have. But I'm taking this opportunity to thank myself.
Okay. It's a good team, 10 years.
Right. So bubble or trouble? I don't think that we are in either camp that, we should be very worried about, nor should we be in the camp that, should be greedy, right? Now you can think that's a hedged kind of a view, right? Don't go to either extreme. But let me try and paraphrase, when we are asked, market kya lagta hai? Because this is what comes to us, whether we attend a wedding or whether we attend a funeral. In the side, फंड मैनेजर को हमेशा यही पूछते हैं कि
बर्थडे पार्टी में भी
पूछते हैं सो मार्केट क्या लगता है, राइट? सी, मार्केट में बेसिकली 3 चीजों का संगम है, राइट? यू गॉट अर्निंग्स, you got liquidity, and you got sentiment, and the interplay of that is pretty much what determines the medium term structure of markets, right? Now, if I take the first pillar, that of earnings, the last 3 years we have actually seen earnings double, on the base. So just to give you some context of numbers, from about 6.5 lakh crores of total profits, today we are close to about 14 lakh crores of total profits, right? And if you really look at the journey of what the market caps have tracked, it's been pretty much in line. So it has not been something very ecstatic to say that, there is a significant amount of overvaluation. That's point number one. Second point is ki, as Shaurya will also mention, that our share of GDP in the world is likely to keep going up. Today, we are at close to about 3.5 to 3.6% of world GDP. And we definitely do think that we should be punching way above that weight in years to come, maybe close to about 6, 7, or maybe even 8% of GDP over the course of the next decade or so. Now, if I look at the market cap of India as a percentage of the world market cap, again, we are close to about 3.5%. So where really is a bubble to say that, things have gone totally out of whack, right? Yes, what we have today is a sentiment which possibly is at its extreme, wherein sabko lagta hai ki, there can nothing go wrong in India. Everything that you think, both structurally as well as cyclically, is going right for India. When I say structurally, we all know all of those things. Demographics, the fact that our digital stack is really firing, the fact that our productivity is improving. But even on a cyclical side, the fact that, China is on the back foot in so many levels has also meant that cyclical tailwinds have come to India, and which is kind of propped up, and therefore the fear, and you can say, fund manager ko hamesha thoda cynicism hota hai, okay? The fear is that, having getting it too good, can there be some kind of a pullback in sentiment? Now, that is something that is very hard to kind of measure and to evaluate. And the only solution, if you ask me, is to take a slightly longer term view, rather than getting worried about the next 3 months, 6 months, 12 months, ki China mein kuch hoga, China, Taiwan mein kuch hoga, etc. Beyond a point, there is nothing we can control about it, right? It is going to do what it will do. Let us focus on the companies and their execution and the capabilities and the growth profile of India. And last point is that of liquidity, okay? We are just getting started on liquidity, okay? It might surprise you, and while, we've grown so stupendously as AUM, it might surprise all of you that even today, cash in the hands of people, okay, is almost equivalent to 75% of all the household wealth that is in markets, including mutual funds, including direct stocks. It is still 75%, okay? And that is earning nothing, okay? Despite demonetization, 1, 2, etc., whatever you have, that is the amount of money which is still earning nothing, and which is there in people's homes under whatever the mattresses, etc. Right? So we're just about getting started when we think about the greater contours of each of these three elements. The last thing as to why is it that we are positive on, of course, the global and the macro is what Mahesh also rightly referred to, is give us, at the end of the day, the source of growth in the future comes from the activities that companies do today. And what is the one activity that they have to do to ensure that their growth profile remains sustained? Is capex, right? Now, over the course of the last decade, capex was in neutral gear at about 6.5 lakh crores. I'm talking about the listed companies, right? I told you that profits and cash flows are at 14 lakh crores. Capex has now moved to 8 lakh crores. Okay, after 10 years of no capex, we have started to see the first signs of capex moving to 8 lakh crores. This 8 lakh crores potentially can become 10, 12, 14 lakh crores in this cycle, and that will sow the seeds for the next growth cycle. So as long as we are clear that, the corporate balance sheet is in good shape, there is a growth profile, yes, there is an exuberance in sentiment in the near term, we have to be mindful, and the only solution is asset allocation to have a longer patience rather than expecting fireworks every 6 months.
So what we'll do for the audience here, and we have packed houses, that we'll break things very simply. There are a lot of folks who are attending for the first time, so we'll break it very simply. There are complicated terms, but we'll make the complicated sound very easy. Simplicity is what we will try and adopt at this voyage. So, okay, the big picture is strong. It needs no introduction. India is growing. This century belongs to India. Now, how can you as a fund house maximize on this? I mean, the pitch is great. You can make one run and you can make a six. So what is your plan and process, not plan, but process to ensure that you can maximize with keeping the guardrails of risk management? You made some slides, so why don't you walk us through them?
So, Dhaval, do help me out on this. Great. See, I think, it's important to take back.
You want to refer to some of them?
Yeah, maybe I'll just walk around.
Yes,
this
please,
also
it'll be
and
nice.
make this interactive, right? See, I think we all understand and relate to cricket, right? Cricket is in our blood, in some sense, right? Now, if you look at test match cricket, which is like, say, a marathon investing, and I see a lot of parallels between sport and investment, okay? Batting, if you look at it, there are three kinds of batsmen, right? You've got the opening batsman, you've got the middle order, and then you've got the tail ender. Each have a particular purpose. It isn't that while batting is simple, everybody knows that batting is all about trying to make runs.